Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on May 5th. My name is Ian Saunders here as well with Miles Clark. So, Miles, good to be sitting across the table from you here. And I know you've been on a couple other podcasts with Will, but it's good to be sitting across from you here.
Yeah, our first time together. We'll see if we can hit a home run here and take it into the weekend.
Yeah, and coming into movement over the course of the past couple of weeks, we've had some pretty kind of focused podcasts over the past couple of weeks. So we wanted to take a step back this week and look at some of the kind of broader movement across mainly on the equity side of things. Coming in, obviously, the podcast ending on May 5th. We have a holiday, Cinco de Mayo, coming up. It's also a semi holiday, I guess you could have, with May 4th being a heavy hitter for a lot of Star Wars fans out there. So I guess May the 4th be with all the Star Wars fans that might be listening. But tuning in here this week, got a lot of movement over the course of the past few days, right? We had a Fed rate decision yesterday. Fed decided to raise rates by 25 basis points, kind of in expectations with a lot of market movement. Did highlight some potential for pausing rate hikes, kind of moving forward. But markets coming in today, we're looking at a broader marketplace down, depending upon the index. I mean, both the Nasdaq, S&P, and Dow all in negative territory. Dow almost down 1% at the time of this recording. S&P down around 0.5%. But just kind of more negative movement, at least, that we've seen over the past couple of days.
Yeah, we've been kind of saying pausing for quite a bit now. Continuing to see how we digest these rate hikes. So certainly, plenty of stuff to watch going forward.
Yeah, absolutely. And a lot of other aspects that we're looking at here on the Dorsey Wright side. The beginning of May also brings about a pretty important market time frame for at least those kind of classic market adage followers, right? The sell in May, go away, come back in November. The concept of market seasonality is a very important theme and something that we monitor pretty closely here at Dorsey Wright. We do have some models on the platform that do make shifts on those seasonal timeframes. So we'll talk more about those changes, specifically in some of the fund score method changes next week, with those changes taking effect here on Friday, May the 5th, actually. So don't have insight into what those we're looking at the time of this recording, but we'll definitely be back to talk more about that next week. But from a broader perspective, looking at the market historical tendencies during this time frame, right? I mean, the whole sell in May, go, it sounds nice, right? It sounds very clean. It rolls off the tongue cleanly, and a lot of it probably circled back, going all the way back to the days of Stock Traders Almanac, where we kind of were pulling from some of those initial studies and reports from that's back when everything wasn't as digital, right? It was when the summer months came around, people might have more of a tendency to go to the beach and might not be in front of the phone as frequently as they were. So markets might not have done too much in the summertime when people wanted to go on vacation, right? Yeah. And I mean, that makes sense, right? From a logistical perspective, things might take a little bit of a breath or a pause when people aren't around as frequently. But we've seen a lot of movement over the course of the past few years, several years, really up until last year, show that, the market, does okay, still positive during a lot of those seasonally weak periods. So looking specifically at the Dow, studies from the Dow from 1950 up through April of this year, we were looking at 6 consecutive seasonally weak periods taken from the end of April to the end of October of each year. 6 consecutive periods there were in positive territory for the Dow from 2016 up until 2021. So you saw positive movement from the Dow during each of those 6-month timeframes within each of those years. And then you got 2022 last year, a lot of interesting movement occurring throughout the course of last year, and specifically within that seasonally weak timeframe. Beginning with that seasonal period, the Dow down not quite 1%, down 0.74%, but still negative over that 6-month stretch, which was a kind of flip over what we'd seen over the past few years, and does go back to that kind of underperformance during that seasonally weak period, right?
Right. Yeah, no, I mean, I agree. And for those of you who are listening or watching on YouTube here, we're going to throw the performance table up on the screen. So hopefully you can, kind of watch along with us. But I think it's, just important, to mention, when you take a broad step back and you take a look at, you mentioned, Ian, over the last 6 years, you've kind of seen it buck the trend a little bit in terms of positive performance. But, you take a look at kind of the overarching seasonality aspect, going back to the root of the conversation, and you say, hey, if you are investing, through May to October, end of October, you're seeing a seasonally weak period, only on average a 0.84 average return during that seasonally
in
weak
which
period.
we were lower than last year, right? So
Right.
still under that performance
Right.
trend.
Yeah.
And taking that to the seasonally strong period, which we just moved out of, right? We're supposed to be in that strong period. I mean, the average there, you're up what 7.26%.
So, yeah.
During that season. So, I mean, the performance table of Miles touching on there. I mean, it goes year by year breakdown, 1950 to 2022 for those that are just going to be listening. And just has, I mean, 2 numbers for each year. What'd you do during the seasonally weak? What'd you do during the seasonally strong? Last year was kind of what you would expect. We saw negative returns during the seasonally weak, positive returns during the seasonally strong. Not quite as positive as we were expecting. I mean, you saw the Dow up 4.17% during the seasonally strong period that just ended here with the end of April, which is positive, right? I mean, it's better than we saw in 2021.
What exactly?
Right.
And I mean, and I'll say this: a lot of it's coming, throughout the first quarter of this year, right? I mean, you're getting 2022. If you could say, "Oh, I'll take 4.25% almost," you'd be happy for 2022. So
yeah, and I think that another important thing to keep in mind. I mean, you saw that the Dow was up just over 4% for that seasonally strong period from the end of October to the end of April, right?
Right.
Over the past month, the Dow was up 4.2%.
Right.
So, I mean, you really saw a lot of that come over the last 30 days heading into the end of that seasonal period. And the Dow hasn't really kind of been the outperformer over the course of this year so far, right? We've seen a little bit of lagging there from the Dow. Going to be an important thing. And we'll hit it. You mentioned the Nasdaq. We'll hit on that more in just a sec. But I think some other tendencies that we wanted to hit on for the broader return profile as we're moving through the month of May and into June and so on and so forth is, I mean, sell in May, go away sounds nice, but May generally tends to be kind of positive when you're looking at that on like a month by month breakdown, right?
Right. Yeah, and that's another kind of chart we'll throw up here on the screen at this point. This was from the Were You Aware on Monday. Let's see, Monday the first of the month we ran this. You see positive returns generally for the month of May.
At least out of the past 10 years, 9 out of the past 10 Mays have been positive, right? We saw 2019, May was pretty bad, 6.34%. During that time frame, but I mean, you've seen just kind of positive, slightly positive most of the time during the month over the other 9 out of the past 10 years. And so maybe we should say sell in June, go away.
Yeah, maybe it's not warm enough.
Yeah,
not everyone's at the beach quite yet, right?
Right. That doesn't sound quite as good. June tends to show much weaker, more muted returns there for the month of June. But I mean, some interesting points that just because it's sell and may go away, just because we see these return tendencies that do come into place with, hey, you might not want to only hold during the seasonally strong, but you typically see at least weakness during that seasonally period, relative weakness to what you'd seen previously over a longer term, I mean, 80-year perspective that we were looking at in this test. But that doesn't necessarily mean that May has to be negative, right? I mean, I think that's an important thing to keep in mind as we're looking at some of these broader indices and broader indicators, is that, I mean, they're flashing some signs of concern recently that we've seen with domestic equities not being as high in the dollar rankings as we would really like, right? I mean, you're seeing it down to the bottom half of those rankings. We're seeing some other participation readings maybe moving back a little bit. We're seeing stuff like the money market group on the asset class group scores maybe creeping up a little bit. So some signs of concern, but that's certainly things to continue to monitor. But just because we moved in May doesn't mean we're all of a sudden going to turn down and go negative.
Right. Well, and also, I think it's important to note there is that just because, you can focus in on those strong areas of domestic equities, right? I mean, you focus in on, we touched on last week, consumer staples, technology is playing a defensive type of role, right? So focusing in on those kind of strong areas and avoiding the weak is, I think, more pertinent during times of seasonal weakness than anywhere else.
Yeah, absolutely. And I think to that point, you were mentioning looking at different areas. I mean, strength and weakness across the domestic equity space. We want to spend most of the rest of the time today just really looking at that 3 main U.S. equity indices: the S&P 500, the Nasdaq Composite Index, and then the Russell 2000 is kind of a breakdown of, okay, where are we seeing what's been strong, what's it looking like now, and what's not looking great from a perspective there. So looking at the S&P, I mean, if you just look at it from a straight performance time frame between those 3 areas, you're looking at the Nasdaq that's up almost 15% year to date. The broader Nasdaq Composite. You're looking at the S&P that's up 6.5%, so less than half of that. And then you're looking at the Russell 2000 that's in negative territory, down just over 1% on a year-to-date basis with market movement there through Wednesday. So I mean, that kind of gives you a feel for Nasdaq growth heavy stuff has been doing pretty well. The S&P with a lot of the mega cap weighted, heavily weighted areas up towards the top of that's been kind of carrying it higher seemingly, but it's kind of been the more middling, and then small caps have underperformed.
Curious on your opinion on this one. You think that's bullish or bearish? I mean, typically you see, if we're going to have to chalk points up on one side or the next, typically you like to see small caps outperforming, or not outperforming, but at least in positive territory if you're going to see, kind of a bullish point. So what are your thoughts?
Yeah, I think it depends, right? I mean, ideally you'd like to see, Tom Dorsey used to say, you don't just want the generals out there alone on the battlefield, right? You want the soldiers behind them kind of carrying the weight further. And so I think that causes concern when you see these mega cap large companies that are just carrying the broader indices higher. But it's not like every other area in the market has been terrible.
Right.
It's just that it hasn't been as strong, which I think that could be an interesting place to continue to monitor. And I think maybe if we look at the Russell first, in that case, I think we're looking at a pretty pivotal point here for the Russell 2000 index as we look toward the kind of seasonally weak period. I mean, we're sitting there with the index that's given 2 consecutive sell signals on that default chart. It's a pretty definitive trading range that we've been in here since March, right?
Yeah,
I mean,
between
that 1800 down to 1700 point, that 1,000 point or 100 point swing, sorry, has been pretty definitive range. It's certainly had its ebbs and flows, has its ups and downs, but it's a definitive range it's been in.
I'll tell you what's concerning to me about it, if I had to give my opinion on it, is that you've got the bearish resistance line creeping down at the same kind of rate as you see those decreasing higher bottoms, or excuse me, lower tops. Right. So you kind of see in that diagonal line leading our way down. Eventually, if we keep moving sideways like this, we're going to run into that trend line. And if we're still on consecutive sell signals in a negative trend, right? Path of least resistance looks to be lower. Am I wrong there?
Yeah, no, I think, but that brings up the good point about that 1700 level, right? I mean, we fell to that level on a pullback that we saw for the small cap space back in October of last year, rallied sharply higher in November, getting up north of that 1850 point over the weeks after that, kind of breaking back through to a positive trend from a near-term perspective at that time. So now we're 2 consecutive sells, series of lower highs and lower lows like we've seen. We got a reversal back up into a column of X's with movement on Wednesday of this week, right? And then now all of a sudden we're pretty close to reversing back down into a column of those, at least at the time of this recording. So we'd be looking at potential third consecutive sell signal with common movement to 1710, and then we'd meet that support level at that 1700 point. So if we do fall through that, I think that's a good point to touch on, as you said, that's going to be, we're looking at further support from there down in the 1650 range, which is going to be your lows from the June and October of last year. So we're seeing some pretty notable support levels coming into play from a near-term perspective. But if we were able to, let's just say, break out higher, right? I mean, if we did turn around, maybe get a different kind of reversal pattern, swinging higher, all of a sudden you're pretty close to breaking through that bullish support line or the bearish resistance line. And then you're looking at not much overhead resistance from that point. Right. I mean, you're so
200 points there.
So, I mean, this kind of you see the consolidation of the trading range, and we can kind of go, and obviously we're not going to predict which way it's going to go from here. But I think knowing those support levels and resistance levels are going to be pretty important as we move into the seasonally weak period. See if what has been weak continues to be weak as we move through the next 6 months.
I agree. Won't ramble.
No. And then in looking at other areas, right? So we've looked at, okay, what's been weak? Small caps. What's been strong? Whether you're more growth oriented or kind of risk on areas like the Nasdaq composite, right? And so you look at that area. I mean, we're talking about pretty notable support levels there for small caps. For the Nasdaq composite, again, kind of broader, not necessarily cap oriented there. It has multiple constituents that are going to be included across different kind of sizes and styles, but generally more risk on, done much better this year, up almost 15%, but at pretty notable overhead resistance that we see, at least on the default chart, up at that 12,200 level. So we're currently on a sell signal in a column of X's in a positive trend. So a little bit of kind of a mixed bag from an absolute perspective.
Yeah, and Will and I mentioned this one last week, so we're kind of returning to this aspect for those of you who are returning. But positive. I mean, if you want to again bullish point here. That's technically a shakeout pattern. That reversal back
That's a
up.
good point.
We're
Yeah,
in a positive trend. We're forming that triple top.
hasn't
Break past
completed
the
yet, though.
resistance. Yeah, break past that resistance would complete it. So keep your eye out on 12,200. We hadn't quite reached it at the time of last podcast. So now we rallied up. Looks like, again, at the time of recording, we backed off slightly. Haven't reversed back into O's or anything like that here, but we backed off slightly.
Yeah, and I mean, you need to get to 12,300 in order to break through that spread. What's that spread? Quintuple top.
Yeah.
I think. I mean, that's a pretty heavy overhead resistance that we've seen from September of last year, February, March, and now April twice. And so that 12,300 level, place to watch, monitor to the upside there, to the downside, that 1180 or 11,800 rather, is going to be that kind of initial support. And then you got 11,700 and 11,700 and 11,600, kind of steady, really close support to the downside there with that bullish support line coming into play. So definitely going to be some important places to continue to monitor there for the Nasdaq moving forward. But now when looking at, okay, we've looked at small caps, we've looked at the more growth oriented area with the Nasdaq composite.
Goldilocks.
In looking at the S&P 500, right? Different picture, but a certainly a notable picture. We've seen more consistent improvement from an intermediate term perspective over the course of the past several weeks. 3 consecutive buy signals back into a positive trend there in March. Gave another buy signal earlier this week up at that 4180 level. Met that resistance that we got to back in February of this year, and then turned right back around, and now we're sitting at support miles down at that 40-60 point. So, I mean, each of these 3 charts look pretty different. I mean, they're all looking at domestic equities. What is your kind of take from this one here?
My concern here is that if you look back at beginning of 2023, right, consecutive buy signals, break back into a positive trend, rally up past some pretty significant resistance. Again, we're talking back in February, rally past 4,100. That was looking good. Then you post a sell signal, right? Then you ultimately fell down and kind of wiped out your progress that we had made through 2023. Here, I think that it's positive, right? 3 consecutive buys, move back into a positive trend. I'm a bit concerned though if we post a sell signal here, just because of patterns, right? And you see consecutive buys, then post a sell signal, move back into a negative trend.
You're looking at, I mean, over the course of the past, talking about just the signal reversals, right? Yeah. Let's go back to November of last year. We got 2 consecutive buys in November. All of a sudden moved into December, 3 consecutive sells. Then moved into January. We got ultimately 5 consecutive buy signals, 3 consecutive sells, 3 consecutive. I mean, you can see that it's just one signal tends to lead, which is what you want in a trend following perspective. Right. But I think the other important, if you just kind of squint your eyes a little bit and zoom out, the other important thing to note with each of these movements, right, it's been very cyclical in nature, up and down, is that the lows haven't hit their previous lows from those pullbacks or retracements, and the highs have surpassed the previous highs, right? At least from the past couple occurrences. So I mean, we're looking down at the 3,500 level that we got to in October of last year. Certainly didn't get to that in the pullback we saw in November, and then the pullback we saw in December was also north of both of that November pullback. We rallied up past the December rally high in February this year, turned around, headed lower, and still remained above that December low. Now we've turned around, we've met that February rally high up at that 4180 chart level, which we're not able to move past that. That kind of ends the streak that we were just talking about, right? Of that kind of stair-stepping movement higher. So to your point, that's going to be a pretty pivotal near-term support to monitor here at that 4060 level, but then also monitoring that kind of 3920 level, really kind of south, right? The support beneath that 4,000 point is going to be a pretty interesting point to continue to monitor here to see if we get more consistent movement lower, if we did violate this initial near-term support, or if we're still able to kind of maintain that longer-term trend of, okay, well, at least we're not making new declining lows as we're seeing these kind of pullbacks take place in the market.
Yeah, and you and I were talking, before the call, or for the podcast, we hopped on 4,200. Psychologically, it's kind of a point to look towards. You move past that, though. I mean, you don't see anything there. Top of the trading band, 4320 is kind of your next level of resistance there. So I think if you do kind of solidify this support there at 4,060, if you solidify that support there, get that reversal back up, move past 4,200. you have your eyes set on that resistance there from where's that, August highs?
Yeah, the August rally highs from last year. So yeah, there's not a ton kind of overhead after that 4,200 point until you get to that 4320 level. And then north of that, I mean, we're looking at potentially new 52-week highs if we can get back to that level, which would be a nice thing to say.
Year.
Yeah, absolutely, would be a crazy year. We thought last year was crazy. Just wait until this year. But I mean, when we're looking at movement for the broader S&P, right? I mean, like we said, up 6.5%, and a lot of the movement that we've seen to the upside for this cap weighted index is the largest name in the index, right? Apple. Yeah, I mean, we're seeing Apple up 28% on a year-to-date basis with market movement there through Wednesday. And you talk about a consistent near-term picture. We've seen Apple, the default chart of Apple, push 3 consecutive buy signals. It's going to be reporting earnings by the time this podcast would have come out, it would have already reported earnings. So we'll definitely be a pretty interesting point to monitor to see how this looks Friday. So we won't obviously predict what the earnings are going to be, but in looking at, I think it is important to note potential overhead resistance and support levels that we're looking at here. So depending upon which way it goes this afternoon, current technical attribute picture pretty strong, for fiber, right? It saw some weakness back in March, rallied back pretty notably toward the end of that month, or weakness early this year, rallied back pretty notably in March, jumping back up to a 5 for 5 attribute rating, strongest rating we have. 3 consecutive buys in a positive trend, into column fixes, gave a buy signal last week. I mean, it looks like a pretty strong picture when you're looking at that default chart.
Oh yeah, definitely. And I'll add to it. I mean, you've got strong support, all for
steady
below.
support.
Yeah,
too.
yes, yeah. Exactly. And it's kind of like clockwork, reversal back down, brief exhale back down into O's. That's only a 3-box reversal, reverse back up, post a buy signal, reverse back down, comma 3 O's. And then post a 3rd consecutive buy signal there. So right. I think you're going to keep your eye out on resistance. It seems to be kind of sticky around kind of if we were to get a positive result there, we're going to keep our eye on resistance that it's around the 176, 178, 180 level. I think is going to be a kind of a range to look towards. But you do have like you mentioned steady support below if things go poorly.
Yeah, and I mean you're looking at the all-time chart high of 182.88.
Yeah,
that was seen in January of 2022. And so, I mean, we got closer to that level in April of last year, turned right back around and moved lower. Got closer to that level in August, turned right back around and moved lower. We're creeping back up toward that kind of upper territory, about 10 points away now, 15 points away, I guess now. Well, maybe we'll see how this movement kind of continues to happen. But these resistance points, I think, are going to the Miles touch on there up in the upper 170s to the low 180s range. Pretty notable resistance levels that we're seeing there for Apple. If we got a strong beat, maybe we see continued movement higher. But the steady movement we've seen recently, I think, is an important thing to keep in mind with that steady support as we look toward the next few days, weeks, and months as we move into the seasonally weak period.
Well, we'll just have to see.
Yeah, that we will. So I think that wraps up. I think we've run through enough charts for the audience here, Miles, at least for this week. So I think that wraps up most of what we were looking to touch on here. So thanks for letting me join you, I guess, with you being on
back-to-back weeks. So you'll be seeing more of me.
There we go. That'd be great.
Yeah.
So yeah, and thank you very much for everyone tuning in and listening to us or watching us here this week. And we'll be back to talk with you again next week.